Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and I took my 15-year-old down to way South Georgia today, and we were looking at some land that has a bunch of fishing ponds on it, and I think it's the place I'm going to start taking him fishing. Really cool stuff. Okay, bass fishing. He loves to bass fish. Anyway, that's where I've been this morning. Okay, so here's what we're looking at in the digital asset market. We've got Bitcoin that is itching to cross $50,000. And so I tweeted this out, I believe this morning. Yes, because it's Valentine's Day, and I did get my wife some Valentine's stuff. So we want Bitcoin. I said Bitcoin 50K will give crypto a ton of headlines tomorrow. Hit it. So I'm hoping that Bitcoin will hit 50K today or tonight. If it does, then we will be swamped with headlines all over the media about Bitcoin hitting 50K. It'll be a huge milestone. It'll be good for all of crypto and probably bring in a ton of new investors. So that's a good thing. Looking forward to that. Pablo Graylet sent me this from CNN. CNN has been activated. If you've been ignoring Bitcoin thinking it might just be a financial fad, now's the time to start paying attention. Here's what you need to know. I'm not going to go into that article, but suffice it to say, all the media, the traditional media, they've all been activated. All these celebrities are being activated. Unfortunately, right now they're talking about the wrong thing, but that'll change eventually if they haven't already. I think Gene Simmons has already found XRP, but a lot of these celebrities, they'll wise up after a while and realize what the one is. You got to just give them some time. XRP Bart sent me this, which I thought was bizarro, from the European Central Bank for Thanksgiving. Roses are red, violets are blue. We'll keep financing conditions favorable till the crisis is through. I mean, it's just weird, folks, because what they're saying here is we'll keep printing money until the crisis is through. And printing money does not do good for anybody. They think it does, but it only serves them in the short run to print money and create the facade of a healthy market is all it is. But it's at the expense of a future disaster. Always is. And it's crazy. It's like a bunch of people went to the same schools, same Ivy League schools, and they all think the same way. They all talk the same way, and they all do the same stupid things. When you would not conduct your finances in your home the way that these people do with other people's money running governments, you wouldn't do it in a million years because you'd go bankrupt. But they're all looked at because they went to the right school and they know the right people. They're all looked at as if they're some kind of geniuses. And the truth of the matter is, most of them are not only are they not geniuses, but they're stupid. And if they ran their own checkbook, they probably couldn't do it efficiently. And they certainly could not run their own households the way that they're running these central banks and money printing and all that. Take away access to that money printer and see how fast you go bankrupt trying to live your life like that. It's really awful. Okay. This is interesting because I saw this tweet earlier in the week, and then I did not see the follow-up, but until I saw this lawyer's video, then and what this all has to do with the SEC and Ripple and a potential settlement. And this, as you'll hear from this attorney in a minute, he says that he thinks that there's a settlement that's going to happen sooner rather than later. I'll let you hear it out of his mouth. But to lay it out for you, I want to show you what he's referencing in the video. I want to tell you, I'm not going to cover the legalese part of it because that I try my best not to go over things on this channel that will put my audience to sleep, and I think that part of it will. I'm going to give you the gist of it. The gist of it is that the acting chair, Allison Heron Lee, had put out a statement on contingent settlement offers, okay? And I didn't get into all the details of this. And then there was also then Hester Pierce. So this was put out on February 11th. The very next day, on February 12th, Hester Pierce puts this out: we should be able to consider contingent settlement offers and enforcement actions. So in other words, Hester Pierce and this Elad Roisman apparently are not in alignment with acting chair Allison Herron. Okay, and so, but the interesting thing, and this lawyer, who I'm going to show you in a second, he points this out. It's very obvious that all of this talk, and he said that this talk refers back to the kick lawsuit by the SEC that was settled. The kick token, I believe, I think that was what it was, kick. But anyway, he says that what they're referring to is contingent settlement offers in that kick token lawsuit, and the current Allison Herron Lee was trying to change it, and they're like, no, you don't need to change it. That's the gist of what, and I'm giving you the mega simplified version here, but I'm going to show you. This is the guy. His name's Jeremy Hogan. He's an attorney. He did a part 1 and 2, and the part 2 is the one I want to focus on. After he went through all of the legalese. Now, before I keep saying legalese, I encourage you to go and watch his whole video, okay? Because from the beginning all the way to 6 minutes, he's giving you all the details that I'm not giving you. And I think you should go and give him a subscribe. Legal Briefs, okay? The guy's really smart, and he's really doing a good job for people that are investors in XRP. He's really putting out some really good information. But from 6 to 7:48, he gives you his conclusions. That's what I want you to hear here. Here we go.
Politics. And the issue is not over, because Ms. Lee will only be head of the SEC until Mr. Gensler is confirmed as the new head of the SEC. Now, after that happens, he will then make the decision. And when will he be confirmed? He's not even scheduled to be voted on yet, that I'm aware of, because Congress has been a little busy with, insurrections and impeachments and that type of thing. But once he is confirmed, this decision will be squarely in his lap. And although Gensler is not a deregulationist by any stretch of the imagination, he is a crypto guy, and he is not going to want to see Ripple leave to Japan. Now, this is just my opinion, and it's as good as yours, but I believe that Gensler will approve the settlement that I believe Ripple offered as the SEC. So what I am seeing in these statements is kind of a public airing of grievances of an issue central to the behind-the-scenes negotiations that I think are going on with Ripple and the SEC currently. A settlement that would be good enough for Ripple and great for us as owners of XRP. As you may recall, my previous thought was that the Ripple case was likely to settle towards the end of the year, maybe in October or November at mediation, and I now have a new opinion. I would suggest that we see a settlement either before the 22nd, which is...
One thing that I find fascinating about this guy is, if you'll notice while you watch this, he's got, I think it must be some kind of an effect, but his body is moving back and forth and like around in a motion, and it's kind of interesting. I was wondering why he did that.
Trial conference or shortly after Gensler's confirmation. I no longer believe the most likely outcome here is that this case goes to the end of the year. The main reason I sense this is not because I trust in Gensler so much as because I sense that Ripple is conceding more than I had previously imagined, and therefore I feel that the sides have come so much closer to an agreement than I imagined would be possible before really on Ripple's behalf. So everyone keep your eyes down, your ears open. I sense that something is in the air, my friends. But most important...
Okay, I just wanted to show you that part. All right, next, Crypto Dim sent me this. Now, this guy apparently is also an attorney, and I like his thought pattern here. What if this whole SEC lawsuit is one giant retail shakeout? What if the institutional investors are plugging Bitcoin in public but buying XRP in private? What if we think we're waiting on regulations but we're just waiting on them to fill bigger bags than ours? apparently Brad Combs had put out a theory on this. Once again, this is exactly what Tika Tawari says happened with the dot-com boom in the 90s, and he's referencing the video with Glenn Beck and Tika Tawari on digital assets. If you haven't seen it, just go on YouTube and type those guys in. It's a good one. He's basically he lays out for you how all these institutional investment banks and all, they will be buying something while they're talking it down they call it talking your book. In other words, they're talking down something while they're buying it behind the scenes, and then later on they start talking about how great it is and get you to buy it and drive the price of what they own up. That's how the world works. This guy's on to something here. He even references me. He says, don't get me wrong, I'm not saying anyone is doing anything wrong or illegal or that one token is better than another. I'm just saying, what if what we thought was real reality was just a well-orchestrated illusion? Like Digital Asset Investor says, just think outside the box a bit. In other words, and I don't think that he's saying here that the SEC lawsuit's fake or anything like that. I think that what he is right about, no question about it. I believe that, look, somebody knows where this SEC thing's going. Do you really think that the people at the SEC don't have friends in high places that they talk to over wine in fancy restaurants in New York? You better believe, folks, anybody that's listening to my voice that still believes that the Wall Street firms like Goldman Sachs and all these big firms, all the huge Wall Street firms, if you believe that all these people that make mega bucks on Wall Street, yeah, they may not call it insider trading, but if they don't, it's because they're responsible for writing the laws that make it not insider trading. That's the way the cookie crumbles, folks. I mean, these people, they don't make money because they're geniuses. They make money because they know what's about to happen before it happens. Period. And I've given this example before. I used to work for one of the major firms on Wall Street. I know for a fact, just this one thing tells you all you need to know, is the major investment firms, they have a brokerage arm and they have an investment banking arm. So the investment banking arm will take a company public. Like, for instance, Coinbase is being taken public by Goldman Sachs. That's one of the firms that's taking it public. Well, meanwhile, their brokerage wing is going to be able to sell Coinbase stock once it goes public to their clients. Are you telling me that nowhere in there's any conflicts of interest? Come on. Come on. Now, speaking of, I was at the gas station yesterday. This is a true story. I'm at the gas station yesterday, and I pull up beside a guy that I know who is with one of the top Wall Street firms. Here's the list. Largest Wall Street investment firms. The firm that he is with is in that list right there. I'm not going to point to which one, but it's in that list. All right. Just spoke to a financial advisor friend who works for a top 3 investment firm on Wall Street. He said a week ago his firm wouldn't let him talk about digital assets. Now they're talking about custodying them. Said regulations are coming. Okay. Now there's 2 things to get out of it. First of all, you need to know this guy rolled his eyes at me for the last 5 years about digital assets. Who's laughing now? How about them apples? But then he says that now they're talking about custodying, and he says regulations are coming. So check this out. So this came through. Lisa Jo Key had sent me this. Clear crypto rules urgently needed as major companies embrace asset. So this is an article about how they're needing rules in place, and they're talking about how BNY Mellon's coming in and all these. So expect digital asset frameworks, and Gary Gensler is probably going to be a big part of creating those frameworks. I haven't mentioned this in a while, but there's so many new people in. I wanted to show it to you. If you haven't heard of Unstoppable Domains, I'm going to have a link in the very top of the description of this video. You can click on the link and you can go and get Unstoppable Domains. They're like $40. And what it is what this allows you to do is it allows you to, you get your own address. If you remember back in the .com days, remember all the .com addresses? Well, this allows you to get a .crypto address. Once you have that address, you can input your Bitcoin address, your Ethereum address, all your digital asset addresses, And then people can send any of those digital assets to this one address, yourname.crypto, and they'll be able to send to that. But the other cool part about this is, and you'll remember back in .com, when they were selling .coms, if you got the right name, people sold, like voice.com sold for $30 million. Well, the same thing's going on with this. Once you buy a domain, if you're lucky enough to get a hold of a good domain, you can turn around. This is a website called OpenSea that's linked to Unstoppable Domains. You can turn around and sell on a secondary market your .crypto addresses. The sex.crypto was sold for they're about selling them in Ethereum. So it sold for 230 Ethereum. Let's look, there's another one down here. Own.crypto sold for 35 Ethereum. So anyway, interesting. This is one of the many interesting opportunities that's going on in digital assets. So the link will be in the description of this video. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, and tell your friends and family to go check out Unstoppable Domains in my description. Thanks for listening.